In his book, Built to Last, Jim Collins says, building a visionary company requires 1% vision, but 99% alignment. Surprisingly, that is the way my guest picks his stocks. He makes sure that the interests of the promoters and other stakeholders are completely aligned. Hello everyone, I'm Ramesh Damani, bringing to you Wizards of Dalal Street, a fresh breeze from mainland China restaurant in the Palladium. Joining me today, the partner and co-founder at Amansa Capital, Narender Nagpal. Narender, your first appearance on television in a long time. Thank you for coming on Wizards.
Thank you for having me on the show. It's a privilege.
Thank you, Narender. 1992, freshman CA, market headlines all about the stock market boom. What caught your particular interest?
I think it was 1991 when it started. I was doing my final year of CA internship. I had no family background in stocks, no academic background in stocks. I was doing my CA. And then the big bull frenzy happened in 1991, if you remember.
Of course, the stock market doubled.
The stock market doubled, and a lot of people got sucked into the markets. I think I was one of those naive people who started investing in markets in 91. And when I passed out of my CA course in 1992, there were two options. One was to go into accounting, the other was to go into markets. I chose to join ANZ Grindlays because they gave me the option to actually be in the part of their equities team. So that's how the beginning happened.
The contrarian streak started with you pretty early in life. The next 10 years, I know, a very exciting period in your life. There are lots of highs and lows in the market and in your career. What were some of the highs and lows that you still remember?
It was an exciting phase. So in hindsight, it was right place, right time. I started my career at ANZ, as I said. And ANZ lost a lot of money in 92, 93, unfortunately, because of the scam. And they decided to shut the business. And I lost the job, I think, pretty much 1 year after I began my career.
Right.
After some time, I joined Barclays Bank, which was the first foreign broker to come into India. I was there for 4 years. Once again, a great time. India did 40 GDRs in 1994 in 52 weeks. We had a great team. We built a good business. I had the opportunity to run the research team myself in mid-90s. It all ended in 98 again, after the Russian crisis, when Barclays decided to shut the business globally.
Ouch. 10 years, few years into your career, you're 0 for 2.
That's right, yeah.
But I know you got a good job at Deutsche Bank. It was almost like a dream job, if you will, employee number one. But still, your heart was not contented, was it?
Yeah, I think it changed over a period of time. It was very exciting in 2002 when we started the business. We pretty much built it from scratch. As you mentioned, it was great to be employee number one. But we built a large and successful business over 5 years. What also happened during that period was that I started to move away from stocks. So in the beginning, I used to look at stocks, I used to write on stocks, I used to write on market. But over a period of time, I had to move more and more into management, since I was running research and equities business as a whole. And towards the end, I realized that I was spending no time meeting companies, looking at stocks. And it was clear to me at that point in time that that's where my passion lied.
I know towards that time also, you met the man who was going to be your partner in Amansa, Akash Prakash. Tell me how that happened and what did you all both think at that time when you entered into a partnership?
I think I met Akash and I got to know him well during the time I was at Deutsche Bank. He was in GIC, one of the largest investors in Asia. He used to look at India, among other markets. And we used to talk regularly on different stocks and sectors. He would also come down to India pretty often, and we would travel together to different cities to meet companies, do an ecosystem check, meet the dealers, meet the suppliers. And I think we realized over a period of time that we looked at stocks in a very similar manner. And I think that was the common ground for us in Amansa later on.
When you founded Amansa, two different people coming together in a partnership, there has to be a philosophy that ties it together. This is how we look at markets, this is how we look at stocks, this is how we look at managements. What was that philosophy that brought both of you together?
I think the fundamental philosophy was that we wanted to run the fund the way we would run our personal money. And the way we would run our personal money is to look at businesses from a bottom-up perspective. So it is not too much about macro. We look at businesses in a very individual fashion. We try to understand what the management team is trying to do. We try to visualize where this business would be in the next 5 to 10 years. And if it makes sense to us from a valuation perspective, and we think this could be a big business, a profitable business in the next 5 years, then it's an opportunity for us.
You know, you often talk to me and in public about aligning interests. You find that it's very important that the promoters and the stakeholders, the interests are aligned. Where do you find this alignment missing?
I think if you look at certain segments of the market, for example, multinational companies, which come in all shades, some of them run the businesses in a manner which takes care of minority shareholders in India. But there are certain multinational companies who obviously do not care much about local minority shareholders. So there is a big difference in the way they treat minorities in India and the way the parent would treat them overseas. The parent would have quarterly calls, they would meet investors, they'll have capital market day. You won't have anything of that in India.
That's a warning sign.
That's a warning sign. The next sign is a lot of management teams for the multinationals, they would have ESOPs in the parent company, but not in the domestic company. So it's a clear case of misalignment, and it's a sign for us to then be careful and then stay away from these companies.
On the domestic side, how do you find out that Indian promoters are not friendly towards minority shareholders? Is there a checklist you go through?
Yeah, it is a checklist, and it all relates to the past. We look at the last 10 to 15-year history, and the big area for us in terms of focus is capital allocation. The single biggest decision an entrepreneur makes or a promoter makes is where does he choose to allocate capital. And that pretty much tells you what he wants to build. In fact, a good quality business will compound on its own for a long period of time. And you look at all the successful stories, Asian Paints and multiple sectors, they have compounded on their own.
Yeah, that's the holy grail. We look for companies that don't need cash. I think when the technology boom happened, a lot of us were seared by it because it was the first time we saw a dazzling global boom play out in our stock markets. And I know you went through one great investment and one mediocre investment. Let's start with the mediocre one. What did that teach you?
I think we are discussing Rediff.
Yes, of course.
This is back in 2007, if I remember correctly. And if you went back to 2007, Ramesh, if there was one trend you would blindly bet on, it would be that internet will take off in India.
Of course.
Young population, English speaking, westernized, falling mobile prices, falling broadband prices. It's a pattern which was repeated all over the world. And you knew India had only 30 million users of internet.
Nothing but place to go up.
Nothing but place to go up. And Rediff was the leader at that point in time. It already had $20 million of revenue. It had a huge consumer base. People used
brand name.
Brand name.
And yet the stock went down from $20 to today 20 cents.
That's right.
What went wrong?
I think what went wrong was the company couldn't keep up with the change in technology and the consumer preferences. They missed the turn on mobile. I think they missed the turn on social media. I think they had to morph from being a portal or a horizontal into a specialized vertical. I think they missed all the big turns, unfortunately.
A management team that you found that did this job, executed perfectly. You know, Lawrence Bossetti at Honeywell used to say, execution, 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 right? You found that in Info Edge, didn't you?
That's right.
What was the greatness of Info Edge?
Over the last 15 years, Naukri has pretty much marginalized all those competitors. They have a 70% plus market share in terms of traffic. They dominate the space today. Anyone who is looking to hire people has to use Naukri. It's immense pricing power and market position which they have achieved over the last 15 years.
And the opportunity set is just beginning.
It's just beginning. We all say that 1 million young Indians join the workforce every month for the next 10 years. Well, there is no better way to play that than Naukri.com.
I think you're spotting a disruption in the chemical industry globally. Right. Take me through that hypothesis, and how do you express that hypothesis in terms of actionable ideas?
The specialty chemical outsourcing industry is today where the pharma industry was 15, 20 years ago.
Meaning strong skill sets, strong India focus?
Right. The strong skill set, the chemical engineering skill set, India is very strong in that. It has a large base of chemical manufacturing. The customer set in the US or the Europe, they do not want to manufacture chemicals anymore in their home place. They're outsourcing to the East. The natural location is China, but China is scaling back on chemical manufacturing because of environmental reasons. They have been far more lax than India, so I think they're pulling back. And it opens up the space for India. And when a customer comes to India for a certain set of molecules, the company which we like is SRF.
That's the way you express it. You think that is the...
That's right.
Work in progress, the example of a company transforming itself?
That's true. And it's in the stage of transformation. And it stands out in terms of their expertise in certain molecules. They have a long history of chemical engineering, They've been producing chemicals for different applications for the last few decades. And what they're doing very smartly now is they're taking the cash from existing business. Some of them are cash cows, they're not growing. They also had a windfall from carbon credits in 5 years ago. And the management team has smartly taken that and redeployed that cash in high technology business.
Moving up the value chain.
Moving up the value chain.
Long-term thinking.
Yes, and it's a 10-20 year journey. I think they started the journey 10 years ago. And the management is clearly committed. This is the path they want to go down to. They will not do commoditized business. And they're using all the capital once again to reinvest in that business.
How did you check the alignment of interest that is so important to you with SRF and its minority shareholders is on the same page?
It's once again going back into history. So if you look at the company 5 to 6 years ago, when the stock was not doing well, the company did two things. One, they used the cash to buy back shares, which a lot of companies didn't do, unfortunately, in that era. And secondly, the entrepreneurial family, the founder family, they bought stock themselves to increase their stake in the company. And they own more than 50% of the company today. It clearly tells us they are fully aligned with the minority shareholders.
That's a check. You spent 20 years in the market, seen a lot of exciting times. The Sensex has gone, as you said, doubled in 4,500. From there, it's up 5x or 6x today. Are you more excited today than you were as a kid, a CA in 92, about stock picking and the stock market in India?
Yeah, I'm definitely more excited today because, as you know, Ramesh, the world is not looking great. India stands out. I think India on its own is doing some great things, and the next 10 years would be a great opportunity for Indian investors. And it's a great place to be. I would not be anywhere else rather than be in India.
Yeah, that's right. Aristotle used to say, the secret of success is knowing more about something than other people. The way you pick stocks, I know clearly you know a lot more about them. Thank you so much for joining us on Wizards and dropping in for a chat.
Thank you, Ramesh, for having me on the show.